Good morning. It is Wednesday, January 21st, 2026. If you traded yesterday, you were pricing in a trade war over the Arctic. Today, the war is off. President Trump just walked to the podium at Davos and told the world, "I won't use force and I won't impose tariffs on February 1st. Wall Street cheered. Europe rallied. The Greenland risk premium evaporated in seconds. But look at your screen. Netflix, NFLX just beat earnings, beat subscribers, and the stock is down 7%. Berkshire Hathaway is dumping one of its oldest holdings, Kraft Heinz, KHC, and gold just tagged $4,800 before slamming into reverse. So here is the conflict for today. The geopolitical relief versus the valuation reality. The president gave us a green light on trade, but the Oracle of Omaha is hitting the sell button. Can the rally survive if the smart money is leaving the building? This is the pre-market pulse. Let's read the Oracle together. Deep Dive 1. The Streaming Wars, Netflix versus the World. Let's start with the lead, because the king of streaming just gave us a masterclass in market psychology. Part A. The earnings trap. Netflix, NFLX, reported Q4 results this morning. On paper, it was a victory lap. They topped earnings estimates. They matched guidance. Analysts are calling the long-term growth story poised and intact. So why is the stock bleeding out 7.1% in pre-market? It's the classic price for perfection problem. When you're trading at these multiples, good isn't good enough. You need spectacular. And with the stock running up into the print, the smart money is taking profits. Part B, the M&A shadow, but there's a bigger game being played here. Netflix isn't just focused on subscribers anymore. They are hunting elephants. Regulatory filings and prediction markets confirm that Netflix has formalized its interest in Warner Bros. Discovery, WBD. This isn't just a rumor anymore. The market is pricing in a high-stakes contest. But they aren't alone. Paramount Skydance, PSKY, is actively extending its hostile tender offer for Warner Bros. At $30 a share. This is a bidding war for the crown jewels of Hollywood, HBO, Warner Bros. Studio. If Netflix buys WBD, they get the DC universe. They become the undisputed monopoly of attention. But acquisitions are messy. The market hates uncertainty. So, you have a solid earnings beat overshadowed by a potential mega merger that could dilute shareholders. Part C. Apple's secret weapon, and don't look now, but Apple is waking up. Bloomberg reports Apple is working on an AI chatbot codenamed Campos to integrate directly into the iPhone and Mac. Netflix has the content. Apple has the device. The war for your eyeballs is shifting from who has the best show to who controls the OS. The trade. If you're long Netflix, analysts say this drop is a buying opportunity. The fundamental engine is fine. But keep your eyes on Warner Bros. Discovery. With two titans fighting over it, the floor is set by that $30 Skydance offer. It's the only arbitrage play that makes sense in this chaos. Deep Dive 2. The macro pivot, Davos, the Fed, and inflation. Now, let's zoom out to the macro story that saved your portfolio this morning. The Greenland de-escalation. Yesterday, we were staring at a 10% tariff on European allies starting February 1st. Today, President Trump said the magic words at the World Economic Forum in Davos. "I don't have to use force. I won't use force." He explicitly stated he will not impose those tariffs on February 1st. The reaction was instant. The German DAX surged 1.2%. The French CAC jumped 1.3%. The euro bounced. This is a textbook relief rally. The tail risk of a NATO trade war has been priced out. The institutional war, but don't get too comfortable. While the trade war cools down, the institutional war is heating up. President Trump took a direct shot at Federal Reserve Chair Jerome Powell yesterday. He said in a televised interview, if Powell stays, his life won't be very, very happy. And it gets messy, eh? Reports say the Supreme Court is expressing unease over Trump's attempt to fire Fed Governor Lisa Cook. Why does this matter to your wallet? Because Fed independence is the anchor of the U.S. dollar. If the market thinks the White House controls interest rates, inflation expectations, and more, then no landing warning. Lazard CEO Peter Orszag is already warning from Davos that inflation will surprise to the upside and could hit 4% in 2026. Look at the data. Construction spending just rose 0.5%, smashing expectations of 0.1%. The economy is not slowing down. We are in a no-landing scenario. If Orszag is right and the Fed is politically handcuffed, you need to hedge against inflation now. Deep Dive 3. The corporate signals, Buffett, LULU, and freight. While the macro narrative is noisy, the corporate signals are crystal clear. And one signal is flashing red. Warren Buffett is selling. Berkshire Hathaway filed regulatory papers to potentially unload its massive 27.5% stake in Kraft Heinz. Buffett has held this stock for over a decade. He stuck with it through accounting scandals and write-downs. Now, he's potentially out. When the ultimate buy and hold investor sells a consumer staple, it tells you two things. Pricing power is gone. Consumers are fighting back against price hikes. Opportunity cost. Buffett sees better value elsewhere or prefers cash. The execution fail. Then look at Lululemon, LULU. Shares are defensive after they pulled their new Get Low yoga pant collection due to quality concerns. This is déjà vu. We saw this years ago with the sheer pant scandal. In retail, when you lose quality, you lose the premium multiple. Lululemon is proving that execution risk is back. The freight recession. Finally, look at Knight-Swift, KNX. They missed Q4 results. The stock dropped. They are the bellwether for shipping. If they aren't seeing the seasonal lift, the physical economy is softer than the construction data suggests. We have a divergence. Construction is hot, $2.1 trillion rate, but goods movement is cold. The silent mover. The New World Order trade gold and Bitcoin. While equities celebrate the tariff pause, the silent mover is telling a darker story about the long-term future of money. Gold hit a historic milestone yesterday, crossing $4,800 an ounce for the first time. Bank of America calls this the New World Order bull market. They argue that central banks and investors are hoarding gold not just for inflation, but as a hedge against the reshaping of global alliances. Even though gold pulled back after Trump's Greenland comments, the trend is undeniable. The SPDR Gold ETF, GLD, saw $3.15 billion in inflows last week alone. But gold has a digital rival. Bitcoin products saw $2.17 billion in inflows last week, the largest since October 2025. BlackRock's IBIT ETF is inhaling coins. However, analysts at Glassnode are warning of prolonged consolidation. There is a massive supply wall above $100,000. We are seeing a divergence. Gold is breaking out on geopolitical fear. Bitcoin is absorbing liquidity but struggling to break resistance. The signal, the debasement trade, is alive. Whether it's gold or Bitcoin, the market is voting against fiat currency stability. The lightning round. Let's translate the headlines into trades. 3 tickers. Rapid fire. Ticker 1. Intel. Intel verdict bullish. Why? The stock jumped 11% yesterday. They're leading the semi-sector higher ahead of earnings. The turnaround narrative is gaining steam, and with hardware demand stabilizing, Intel is the catch-up trade of 2026. Ticker 2. YLP verdict bullish. Why? They are acquiring Hatch, an AI lead management platform, for $270 million. This isn't just a review site anymore. They are pivoting to SaaS and AI tools for local businesses. This expands their TAM significantly. Ticker 3. TRV Travelers verdict Bullish. Why? They beat on profit, underwriting, and investment income. Plus, they boosted buybacks by $5 billion. When an insurer tells you they have $5 billion in excess cash to hand back to you, you listen. Here is your playbook for the next 24 hours. Watch the Netflix dip. If Netflix holds the pre-market lows, the sell the news event might be over. But if it drags down the NASDAQ, $QQQ, the tech correction is real. Monitor the Fed fight. Any more headlines about firing Powell or Cook will spike volatility. Watch $SPY for reaction to Supreme Court news. The earnings parade. We have Procter & Gamble, PG, earnings to digest tomorrow. Watch it for clues on the consumer. Buffett sold KHC. Will PG signal the same weakness? This is the pre-market pulse. The trade war is paused, but the market war is just beginning. Trade safe. If you like our content, remember to hit that subscribe button.